Hey guys, welcome back to the channel. Hope you're doing well. Now, as you'll know if you've been in the Discord server or you've been keeping up to date with my recent YouTube videos, I've been spending a lot of time over the last few months backtesting my SMC strategy on Euro US dollar 2022. Now, a few weeks ago, I actually completed my backtesting and I've since spent a lot of time going through all of my data in a lot of detail and trying to find any possible refinements that I could make to my trade plan to boost my overall profitability. And as I was going through my data, I noticed quite a lot of questions popping up within the Discord server about how best to analyze data. And I was also remembering back to when I first started trading, and I myself actually found it very difficult to analyze data. I was always fine with the actual backtesting and data collection. I never really had any issues with that. But when it came to the sort of very end of backtesting and I was looking to, analyze my wins, analyze my losses, find common occurrences between the two, that was something I always struggled with. I never really knew where to start exactly. I always felt a little bit lost. I didn't really know exactly what I was doing. So today I thought I'd record a video taking you guys through my process of how I analyze my data. I know this isn't going to be for everyone because it's going to depend on your trading personality, how you best visualize data, and also the actual strategy you're trading. But hopefully you guys are going to be able to take some value from this. Hopefully it's going to give you some ideas into how you can begin to analyze your own data and refine your edge in the market based on your backtesting. Now, very quickly, just before we jump into the video, I do just want to mention that all of the data within the video that we're going to be going through is based on my SMC strategy, and if you would like more information into the SMC strategy, I'd really recommend checking out the Discord server where there is a mentorship program currently, and within the mentorship program you're going to be given my exact SMC trade plan. So that's going to tell you exactly what we look for in the market, where we enter, where we exit, and on top of that you're actually going to receive access to all of the data that we're going through here. So 260 trades on the SMC strategy, and there's also around 300 to 400 trades I believe on my price action strategy, which is the other strategy I trade. So if you are looking for a more detailed insight into my trading systems, be sure to check that out. Otherwise, let's just jump straight into the video. So guys, before you're able to do any analysis, you're of course first going to have to actually collect your data. Now, there's no one correct way to do this, and it's going to vary quite a lot between traders depending on how they best visualize data and also any experience they may have with certain databases like Excel. But for me personally, as you would have seen on the channel already, I like to use FX Replay for conducting my actual backtesting. And basically, if you don't know FX Replay already, be sure to do some research because it's a really, really useful tool. But it is basically a backtesting software that utilizes TradingView, which makes it very familiar for a lot of traders like me who use TradingView for their live trading. But it also goes way further back in time than TradingView does, which means you're able to gather a lot more data than the standard TradingView subscription would allow you to. I think they just released a new update recently where some pairs go all the way back to 2006. And then not only that, FX Replay also provide a lot of detailed analysis themselves within the platform, and that goes into a lot of detail about your strategy and about the performance over that backtesting period. Saying that though, no matter how good the FX Replay analytics are, I'm always going to be putting my trades into my Notion database. And the reason I like to use Notion is because it's actually really straightforward. I'm not an expert in Excel at all, but I have managed to sort of get my head around Notion slightly. And yeah, I like the way it's all laid out. I'm able to get a lot of detail within there. The template you can see in front of you now is my backtesting template. And this is, of course, part of my trading dashboard that I have shared on the channel previously. I will link the video here in case you haven't already seen it. But basically, this is the database I use to collect all of my backtesting data. Now, as you can see, we have a little overview of all of the data, and this is split into months. And then we have this sort of total number of trades, total number of wins, break-evens, losses, your win rate, and then also your monthly P&L. And this just gives a quite good overview of everything that you need to see for that month. You can obviously add more columns if you want to, but I don't really feel the need to go into too much detail on the monthly, as once we go inside, you're going to see a lot more detail in the individual trades and how they look on a sort of daily and weekly basis. Just to note here, I also include some little filters so that you can filter between the quarters, because I obviously like to focus on the longer time frame, and quarterly returns are quite important to me. But otherwise, we will jump into the sort of monthly template. I'll show you how I log the data, and then we can get into actually conducting some analysis on the data. So if we jump into January now, you're going to be able to see all the trades I've taken in a lot more detail. Now, as I mentioned, these are sorted weekly. So as you can see, we have all of the weeks of January here, and then within each week, we've got all of the individual trades we've taken that week. Now, I add a whole range of columns to give myself as much sort of data as possible. You can obviously add as many columns as you like. You can take out columns you perhaps don't think is necessary. But for me, some of the main ones that I would say you should always include in your database no matter what are, some of the basic things like the pair. Perhaps you want to put in the quality, so whether it was a valid setup, high probability, or maybe an invalid setup. This is based on my SMC strategy, and that includes a medium time frame and then specific setups. So I, of course, include that in my data. I then have, if we are long or short, I have our entry time frame. And then, of course, I have our P&L, which is obviously very important to keep track of, the result of the trade, when we open the trade, when we close the trade. This is all sort of filled out for me, where it's, how many hours has the trade been open, what day did I open the trade, what month did I open the trade, and what year did I open the trade. And then I also have some analytics on sort of the stop loss size. And then most importantly is, the whole reason I use Notion actually, instead of just keeping it on FX Replay, is so that I can go into a lot more detail about the actual technical analysis rather than just sort of the numbers side. And this is where I add in my sort of confluences, and I have a whole sort of range of confluences, as you can see, that I add, whether that's a higher time frame, POI mitigation, if we're in the premium demand of the medium time frame, where we have a medium time frame liquidation, lower time frame change of character. I try and put in as much detail as possible, because that's going to make it as easy as possible when you're sort of analyzing the data at a later date. Obviously, I have my swing and internal structure as well. That's very important to me for this strategy. And then I have some notes at the end, which again, I can't sort of understate the importance of, because this is where you can really go into a lot of detail about the trade that you've taken. And then most importantly, once we actually go inside the individual trades, I have a lot of detail on the sort of 3 timeframes that I use, and that's a higher time frame, a medium time frame, and a lower time frame. And basically, I have screenshots of all of the timeframes that I'm analyzing. I'll typically try and give a good description as well. I don't have that included just now for this video, but usually I'll give quite a detailed description of, what am I looking at on this higher time frame? What is the medium time frame showing me? Why did I enter on the lower time frame there? And then there's also some sections to put trade management and lessons. Lessons I typically don't use as much in back testing. That's more in my sort of live trading, where I'll be learning lessons. But again, it can still be quite important in your back testing. But as I mentioned earlier, this is just one way to do it. There is no one right way, and I'm sort of repeating myself now. But I just thought I'd give you a little overview of how I actually collect my data. As I mentioned, this is part of the trading dashboard. So if you would like this exact template, you can obviously follow the link that I shared earlier in the video, and I'll actually share it in the description of this video also, and you'll be able to have sort of full access to this template. But otherwise, you can do this every month, input your individual trades. You've then got your trades for the week, as we showed in here. That's going to be split for you. And as I say, not necessary if you don't want to go into weekly, but it just makes it nice and clear for me. I think this is quite important to have an overview of your months. That's going to really help you analyze some of the data. And yeah, so now I've given a very quick overview of sort of how to collect data. Again, not going into too much detail, because I can, I'll save that for another video in the future. This is more about actually analyzing your data rather than, conducting your back testing. But yeah, we will jump over into the sort of data side now, and how you can really go into a lot of detail about all of the trades here. As you can see, we've got 260 trades, which is quite a lot of trades to go through. And yeah, I'm going to show you how I managed to sort of refine all of these trades, refine my checklist, and yeah, easy ways to sort of identify patterns in your trading so that you can refine that edge. So guys, this is where I conducted all of my backtesting analysis. Now, basically, this is just a table I've made that comprises all of the trades that I've taken that I was previously showing you in the sort of monthly breakdown and weekly breakdown. This time they're all just in one single sort of database. And as you can see down, we've got those 260 trades. So it's the exact same way. And this just made it a lot easier for me to be able to go through all of the data and then more specifically be able to refine by certain data points like medium time frame phases, types of setups, wins and losses. This is actually something we'll talk about later, which is, whether it fit my new plan or not. We've then got, month, session, etc. We'll go into some more detail about that in a second. But otherwise, all of the sort of columns here on the right, the exact same as I was showing you within the sort of monthly breakdowns. And yeah, we'll just scroll down and I'll show you some of the analysis I did to begin with. When I first had all of the data in this database, I wanted to get a really nice summary of all of my results. And if we just click this drop-down menu here, you're going to be able to see sort of the type of things that I was looking for, the type of data that I wanted to be able to have on hand about my strategy. And this is when I was then able to start looking into specific areas to sort of refine my trade plan and improve either, my win rate or my overall profitability. So as you can see, we had 260 trades, we had 96 wins, 49 break-evens, 115 losses, which gave us a win rate of around 36.92. So nothing amazing. Again, this isn't a sort of high win rate strategy, but it has a lot of good risk to reward, as you can see, because our total P&L was over 650%. I then like to break it down into sort of quarterly, monthly, weekly, daily P&L. Daily P&L, I wouldn't really pay too much attention to. Again, even weekly P&L, I wouldn't pay too much attention to because it can fluctuate quite a lot. This was just some of the data that I wanted to have in front of me. We've then got some data about, the amount of trading days, how many trades we roughly took a month, how many trades we roughly took a week, and how many trades we roughly took a day. I go into a lot of detail really just about, what was the best month, best quarter, worst quarter, best week, best day. Again, you don't have to go into all of this if you don't want to. This was just some of the stuff that I thought I would like to know about my strategy. Again, worst day here, I can see -3%. I would like to know that so that when I'm in the live market and, I have a -2% day or a -3% day, I can go to my back testing and go, oh, okay, well, this has happened before, I shouldn't be too stressed about it. It's sort of guaranteed to happen as it's happened in my back testing. Again, same here, worst week, -4%. I could finish a week at -4% and be, really down thinking, oh my God, I must have deviated from my trading plan. But if I can see here, I've got hard data that says in my back testing, I had a week that was -4%, then I know it's all part of my plan. Again, continuing down, we have some of the best win rates, either monthly, quarterly, and then some data on the best win. And then our biggest loss is fixed at 1% because for this backtest, I was using 1% risk management on every trade. And then at the bottom here, I have sort of max consecutive days where the profit was greater than or equal to 0. So that's basically where we've either had a profitable day or a break-even day. How long did I go without ever having a negative day? And then we sort of got the opposite here, which is how long did I go without ever having a profitable day? So where the profit at the end of the day was smaller than or equal to 0. Again, don't have to do this if you don't want to. I just, I like to go into a lot of detail in the data of my strategy so that, again, when I'm in the live market and I have sort of 7 days where I haven't made any profit, I've either been break even or made a loss. Again, I know it's part of my strategy. I don't need to stress that much. I just need to, continue trading as I always do. And then again, on the right, just go through some more stuff. So, most trades in a month, least trades in a month, most trades in a week, least trades in a week. And then obviously by the days, how many profitable weeks compared to negative weeks, how many profitable days compared to negative days, and then sort of max winning streaks, max losing streaks. And also quite interestingly at the end, I decided to include max days consecutively traded, then max days not consecutively traded. Again, this would just really help in the live market. Let's say you haven't taken a trade for like 3 days and you're thinking, am I just missing out tons of opportunities? You can see, well, actually, no, because in my back testing, there was an occasion where I went 5 days without taking a single trade. And of course, if that was over the weekend, it would then be 7 days because I don't include weekends on here. I'm only talking about actual trading days. But yeah, basically this sort of overview or summary is just all of the data that I would like to know about my strategy and have on hand. Mostly the stuff that I want to know, I don't really care that much about my best month. Most of the stuff that I do care about is the sort of negative stuff. So like, what was my worst day? what was my worst week. I want to be prepared for the worst side rather than the best side. The best side is great and I'll be happy no matter what, but I want to be aware of sort of what can happen when the strategy is not performing at its best, so that I'm prepared for the sort of emotions that will come with that in the live market. And that way, I can continue to trade my strategy as mechanically as possible because I have that data. At the end of the day, the whole reason we do backtesting is so that we have data to improve our confidence and obviously to then refine our strategy. But, I think one of the main reasons why people are told to do backtesting is so that they can gain confidence in their own abilities, in their own ability to actually trade the strategy, and then to also identify high probability trade examples. So yeah, you don't, as I say, you don't have to include all of this, but I think sort of the more detail you can go into, if there's anything in here that I haven't included that you would like to know, I would probably like to know as well. As I say, I do like to go into a lot of detail about my data. So yeah, let me know in the comments if you think there's anything else I could go into about this. One thing I will mention very quickly about our actual database is to help with the sort of consecutive days where we were losing, consecutive days where we were in negative profit. I also created a sort of calendar view, and this is really going to help you, again, just visualize all of that data in a different sort of way. And again, yeah, it's just going to help you with creating all of that data. Now we've given a sort of overview, we can start to go into a bit more detail about how I actually began to, analyze all this data. We've got the summary here, but let's say, well, we don't even need to say it. We've only got a 36.92% win rate. That's not ideal. I'd quite like a higher win rate than that. What can I do specifically to improve this win rate? There's not actually going to be too much within here that is going to tell you how to improve it. But one way you can do it is to go into a bit more detail about either some of the entry models, maybe some of the medium time frame phases that I say I like to trade, or sort of any other filters that you can actually think of. So as I mentioned up here, we've got a whole range of filters at the top. You can filter your trades by anything you want, whether you want to filter, if it's long or short. Maybe you notice that all of your long trades have a much higher win rate than your short trades, and therefore you only want to take buys. That could be something that you analyze. Again, it could be, what sort of profit do I make on a Monday or during London lull, if I'm out of session, if I'm trading in New York. There's a whole range of things you can go into a lot of detail about. But for me personally, I wanted to focus on my specific entry models and then also my medium time frame phases and my sort of sessions. And I split that down, as you can see, into London session. And these times are all in GMT, by the way. So 7 a.m. to 10 a.m. London lull, which is usually a bit more quiet, 10 a.m. to 12 p.m. NY, and then out of session, which isn't really out of session, but this is just coming to the very end of the hours that I trade. And this is sort of another little filter that I wanted to include. But let's say if we started on entry models, the first thing I wanted to do again would be to gather all of my information about a specific entry model. So as you can see here, we've got risk entries and we've got 91 risk entries with a total P&L of 295.09%. If we just put in the percent there. Oh, there we go. And basically, easy way to do this is what I was saying earlier, is to have these filters at the top, which again is why I love Notion so much, because it's going to make it so easy for you. So let's say we go into setup and we want our setup to be risk entry. All we've got to do is click that and then wait a few seconds because my Wi-Fi is a bit slow, so it's going to take a while. But as you can see, we then have all of our risk entries all in one area. Again, 91 trades, 295.09%. And then you can then, again, go back up to those filters. You can say, okay, well, what was the win rate? I'm going to go, my result was a win. And this is just going to make it so much easier for you to analyze all of your data. There you go, you've won 37 trades out of the 91, you can do some maths there, and you can find your win rate was 40.66%. Again, something quite interesting now, as you saw, our overall win rate was 36.92, which means our risk entries actually had a higher win rate than our sort of overall strategy. So again, you're already starting to see some interesting data begin to emerge, and then you can go sort of one layer deeper, and you can then look at, risk entries in phase A1, for example. Now, phase A1, I actually thought coming into this was the most high probability phase for risk entries, because that's when you're trading pro swing and pro internal. So you've sort of got full medium time frame alignment. But as you can see, we only had 12 trades, which was only around 13% of all of our trades. And yeah, P&L of 49.91, which was only 16.91% of our entire P&L of 295. And yeah, 5 wins, 2 break evens, 5 losses. Pretty good win rate of 41.67%, especially again compared to our overall summary. But then I began to look at sort of other phases, and as we can see, phase A2, which is where you're again still pro swing and pro internal. This is after you've had that break of structure. We can see we had 13 trades, so 1 more, but only 4 wins, so 1 less win, 3 break evens and 6 losses. So our win rate was actually much lower at 30.77 compared to 41.67. So maybe you look at this and you say, okay, well, I want to improve my win rate on phase A2 risk entries. Now, how can you do that? Well, again, we're going to go straight back up to our filters. We can get rid of the result as win, and we can change our medium time frame to A2. So now we have all of our risk entries in phase A2. So you can see we've got 13 trades, 26.72. Now, what I like to do at this stage is actually get out a sort of pad of paper and a pen, and I make a little sort of tally list. And what I like to do is I split it between wins, losses, and break evens. And then I look at some confluences that I've probably noticed either in my backtesting or when going through the trades. Now, these are usually things like, have we come off a higher time frame POI? Are we trading pro higher time frame narrative, or are we trading counter higher time frame? Do we have medium time frame leg inducement? Do we have medium time frame pullback inducement? Again, this is what these confluences sort of tabs over here are really going to help with. If you're doing this through your back testing, it's going to make it a lot easier to sort through your data at the very end, which is why I say it's just really important to go into as much detail as possible when you are back testing. But yeah, then I like to literally get it out on pad and paper and I just do a tally. I will go through every single trade. I'll go through all my wins first, and I will open up the trade, and I will simply go to my sort of higher time frame, medium time frame, and lower time frame, and I'll go through all of those confluences that I've included. For example, are we coming off higher time frame? Well, no, we're taking a short. We're not coming off any demand, so that's fine. Are we trading from a flip or extreme? As you can see from our medium time frame, we're trading from a flip. Okay, cool. Do we have any medium time frame inducement? No, as you can see, we've just sort of got clean candles. Okay, do we have any sort of pullback inducement? Well, you can see on the M1, we have pullback inducement that is formed within the POI, not in front of the POI, it's actually within. That was something that I was looking for a lot within this sort of analysis. I wanted to see whether, there was a big difference between trades I took where the pullback inducement or the sort of liquidation happened within the POI itself or in front. And yeah, as I say, there's so many things that you can sort of begin to analyze. It's really going to depend on your strategy. Obviously, this is focused on my SMC strategy. If you don't trade SMC, this isn't going to make much sense to you at all. That's fine. Just, look at all of your trades. Just literally go through all of the screenshots you have and just try and look for things that seem to keep, reoccurring. What do you keep noticing in all of your screenshots that keep happening over and over again? And then if you notice that they keep happening in losses and not in wins, or the other way around, there's something that keeps happening in all of your wins that doesn't happen in your losses, then make a note of that and then go through your data again and figure out if you can add a sort of refinement to your trade plan. And yeah, this is exactly what I was doing. So for every sort of risk entry phase A1, I did this. I went through, did my tally, listed the confluences that were positive for my wins, listed all the confluences that were negative for my losses. And then I would go on to the next phase. I'd do it for phase B1, I would do it for phase B2, I would do it for phase C. And then once I finished my risk entries, I went into all of my other entry models. I went to liquidity entry model 2A, and then again, all of my phases again. So I'm not saying this is going to be, a quick process, because it's not, it's going to take a long time, but the more time you spend on it, the more detail you go in, the more value you're actually going to take from it. Very similar on medium time frame phases. I had general sort of overviews of the profitability of that phase, and also just, how many trades I took, wins, break evens, losses. Again, this is what I was saying earlier, where I thought phase A1 was my most high probability phase. But as you can see here, out of all of the phase A1 trades I took, which was 31. I only won 9, which is a win rate of 29.03. So actually a really, really low win rate. And if we compare that to, a phase like phase B1, where we had, 27 and a 34% win rate, or even phase D1, which I think we had, okay, maybe it wasn't phase D1, phase C, where we had a 38.6 win rate, it was quite surprising to see that. And that's when I was then able to go into that detail and go, okay, well, is it the risk entries that have that low win rate? Not really, they seem all right. Again, I can go into some more detail to see how I can eliminate some of those losses perhaps. But yeah, you just really need to go through the data yourself. Only you are going to be able to figure out what works for your strategy and what doesn't, because everyone sees the market differently. Yeah, this is just my way of doing it. Hopefully it's, giving you guys some ideas into how you can analyze your data. But yeah, really, it's all going to depend on you and your strategy. Very similar, quickly, we did a breakdown of the London session as well, and I was quite interested just to see how my risk entries performed in each of the sessions. So I just had a general overview of the sessions and also sort of those risk entries within the individual sessions. Now, whilst you're gathering your data, you should hopefully start to see some common occurrences or sort of common patterns between either your wins or your losses. And once you begin to see them, you can start to begin to make some refinements to your trade plan. Now, I would just have a little option down here where obviously I was going through my entry models and I was just making a note of some of the refinements I would like to make to specific either entry models or specific phases. And as you can see with here, we had our risk entries in phase A1. And if we just take this as an example, I had the proposed refinement. If we have no clear leg inducement, our M1 pullback inducement must occur within the POI itself, not in front. And, how did I come to this conclusion? Well, I would have gone through all of my risk entries in phase A1, and I would have seen that, the majority of my losses either had no clear leg inducement or no pullback inducement within the POI. And then I would have seen that, the majority of my wins, if they didn't have leg inducement, had pullback inducement within the POI itself. Now, the reason I was mentioning a tally chart is because it's actually really, really good to visualize everything. If you've got it laid out nicely between wins, break-evens, and losses, and between all of those confluences that we were talking about, you're hopefully going to be able to visualize, a lot of common occurrences between your wins and losses. That's going to make it really easy for you to make your proposed refinements, and you're going to be able to do this on anything you want. Again, it's completely up to you what you want to refine. For me, I was focusing on entry models and also medium time frame phases. So I had my risk entry models. Liquidity entry model 4 was a specific entry model I was focusing on, and then I also just had my POI liquidity entry models, which was where I was sort of more going into more detail about the specific phases. So as you can see, well, we'll go into a different phase. We'll go into phase B2, very simple refinement. Liquidation must occur within the POI itself. Again, why would I have come to this conclusion? Well, it would have been that when I was analyzing the data for phase B2, I would have seen that the majority of my losses came where liquidation didn't occur within the POI itself, and where the majority of my wins were trades where liquidation did occur within the POI itself. So I think I'm sort of beginning to state some of the obvious, but, I just want to make this really clear for you guys that if you can put in as much possible detail into the sort of data that you're gathering, you're going to make it so much easier on yourself to then analyze the data when it comes to that sort of point in time. Now, I think I've given a pretty good overview of how you can sort of begin to analyze your data. If you do have any questions, of course, drop them in the comments and I will get back to you as soon as I can. I do try and make an effort to respond to everyone's comments who leaves them. But let's just jump over now to sort of data analysis post-refinement. And this is where you're really able to see the sort of impact of those proposed refinements that you've made on your trading plan and, see if they were for the better or for the worse. Obviously, we're hoping they were for the better. Otherwise, you wouldn't really have been looking to make them. But yeah, I thought I would just give you a quick summary of the sort of difference between our post-refinement data and our pre-refinement data. So there are two ways that you can gather your post-refinement data. Now, the first way, which is always going to be the better way, is to redo your back testing, this time with your proposed refinements, your new checklist or trading plan. And yeah, just redo the exact same dates that you had already done for your first run through of back testing.
Now, I can understand for a lot of people, myself included, that's going to take a lot of time, especially like me, if you had done like a full year's worth of testing or maybe longer. That took me several months to gather all that data in the first place. So I wasn't too keen on, doing that all again just to have the sort of data of my post-refinement. So another way you can do it is if we go back up to the table we had up here, I simply added in this new column here, which is just a sort of checklist. And I was going through every single trade and deciding if it fit my plan or if it didn't fit my plan. If it did fit my new sort of refined plan, I would give it a tick. If it didn't, I would leave it blank. And yeah, this is still going to take you a lot of time. As you guys know, I had 260 trades in total to go through. So obviously going through 260 trades individually, looking at them, deciding if they fit my new sort of refined checklist. And one thing I would just note here, which I would really recommend you to do if you are going to use this method, is do it at least 3 times, because I found myself quite often, going into wins. So you can see here, 8.3 win. This obviously doesn't fit my new plan because it's not checked, but probably on the first run through, I found myself, typically leaving in wins that probably didn't actually fit my new trading plan. And then also on the flip side, taking out losses that probably did fit my new trading plan. So I noticed on the first run through, I was being too lenient in a sense, that I wasn't really being as strict as I should be with my new refinements. So that's when I would do it a second time round. And I would go back through, every single trade. So, 260 trades again. And yeah, going through the exact same process. Does it fit my new plan? Yes or no? And then again, I said, I'll say this, do it a third time, because there are a lot of times where you're going to be, overly kind to yourself, or you say, with this 8.3 win, I could go, oh, well, it doesn't fit my plan exactly, precisely, but, oh, these things look all right. I probably would have taken it. No, the whole point of making the plan is to have it as fixed and mechanical as possible. And I really think you need to go through, like, as I say, 2 or 3 times at least to make sure that you're being as true to your strategy and as true to those refinements as possible. And that you're not, just making your results look better to sort of pump up that ego at all. So if we scroll back down to our sort of post-refinement analysis, you can see that our total trades went down to 175. Now that's obviously, well, almost 100 less trades than our pre-refinement summary. So you can see we had 260 trades. If we have a look at our win rate before was 36.92, and our win rate afterwards was 49.14. So as you can see there, a huge improvement. And we've also actually reduced our total number of trades by almost 100. So yeah, huge reduction in the amount of trades, and that's obviously allowed us to improve our win rate. Now our total P&L was 610.42. That was slightly down from our overall P&L before, which was 650, but I was more than happy to sacrifice some sort of total P&L to boost that win ratio, because recently, it's been the psychological side of trading that I found the toughest. And, I was wanting to increase my win ratio so that I can sort of make that psychological side a bit easier on myself, not experiencing as long periods of drawdown or as deep periods of drawdown. So my real focus was improving that win ratio, 610% in that year. Am I complaining about that at all? No, of course not. It's an incredible amount of profit. I've gone down about 40%, but in the grand scheme of things, that's really nothing. Otherwise, I was doing the exact same thing, going through all of this data and seeing how it has improved. So, our worst week and worst day, I believe, actually stayed the same. So our worst day was -3%, our worst week was -4%. But you're going to be able to see that, like our highest monthly win rate and our lowest monthly win rate, I believe they both improved. Where did we go? Highest monthly win rate. Yeah, so our highest monthly win rate before was 56.25%, and this time it was 71.43%. So you can see September had a really, really high win rate, and then our lowest was 30.77 post-refinement in October, and before the refinement it was 25% in October. So again, clear improvement. And yeah, go through all of this, do the exact same thing. You're going to be able to see a lot of places where you have improved. And yeah, hopefully that will really give you the confidence in those refinements that you have made your strategy. And then obviously you're going to want to go into more detail about your entry models and medium time frame phases. Now, as I was mentioning before, I was taking a specific focus on entry models, but then we were also talking about how phase A1, I had previously thought it was the most high probability phase of the market and therefore would have sort of the highest win rate or the most amount of P&L. And we saw that really wasn't the case. If we go back up to our sort of pre-refinement, we can see, if we go into medium time frame phases, phase A1, you can see we only actually had a win rate of 29.03%. So when I saw that, I was like, okay, well, let's go into phase A1. Let's go into our different entry models and see how we can boost our win rate, reduce some of these losses at 19. And if we scroll down, you're going to be able to see that we did exactly that, because if we go on to phase A1, you can see we've actually now boosted our win rate to 47.37%. Our wins have gone down to 9. So they were previously at 19. So we've eliminated 10 losses, and that will all be through those refinements that we were looking at, the refinements that we were trying to make to improve our strategy. And as we can see here, that's made a huge improvement to phase A1. Of course, you can do the exact same thing with your sessions, with your entry models. If we go into our liquidity entry models 4, which is, again, another one that I was focusing on quite a lot, and we will compare that to our pre-refinement analysis. You can see that we had sort of 68 trades, a win rate of, oh no, sorry, that's not a win rate of 38.24%. And if we go down, you can see we then had 41 trades, so a lot less trades, but a win rate now of 58.54. So again, big improvement in the win rate. Our P&L, we can see if that's changed at all, has gone down, gone up very slightly. So in that case, we've, reduced our number of trades, boosted our win rate, and also boosted our P&L. So really, really positive refinements that we've made to those liquidity entry models. And again, as I say, you can do this for every entry model you want, every medium time frame phase that you want, or anything else that makes sense to your specific trade plan. As I've mentioned before, it's going to vary a lot between traders and the type of strategy they trade. But yeah, you can literally go into anything that you want to. Now, I hope I've given a pretty good summary of how you can analyze your data, how you can then look to make refinements, and then how you can also compare your post-refinement data to your pre-refinement data to prove to yourself the sort of improvement that you've made in your trading plan, in your edge in the market, and in that checklist that you have for when you are live trading. If there's anything that I've missed out at all, if you have any questions at all, feel free to drop them in the comments and I will get back to you as soon as possible. But otherwise, I think that pretty much wraps up this video. Now, just before I end the video, I will just mention again that this entire database is all available for our VIP members. So this is part of the mentorship program, and you're going to have access firstly to every single trade that was taken in testing. So that's the 260 trades that we've been talking about within this video. And then there's also around 400 trades taken from my other strategy, which is the price action strategy that I mentioned quite a lot on this channel also. So you've got around 600, well, about 500, 600 trade examples taken from back testing. They're going to be continually added to. And then you're also going to have all of this data here. I'm currently typing up the new trade plan that's going to be based on all of our refinements. But yeah, this is available to all VIP mentorship members. If you don't know what's included in that, head over to the Discord server. There's a lot of information on it within there. And yeah, I think a lot of you guys will take a lot of value from what's included within the membership.
So guys, that concludes today's video. Hope you've been able to find some value from that. And if you have, please be sure to leave a like, comment, and subscribe to the channel, as this really helps the channel grow and helps me reach other traders within the industry. And as always, if you have any suggestions for future videos, be sure to leave them in the comments below, or alternatively, you can send me a message on Discord or Instagram, and I'll be sure to get back to you as soon as possible. Otherwise, have a great weekend, guys.